This is your LMAX exchange technical update for Thursday, June 15th, 2017. Euro dollar. So the euro is stalled out after breaking to fresh 2017 highs, but clearly the uptrend here on a short to medium term basis is firmly intact. At this point, the key levels to watch above and below come in at 113.67 above. That's the August 2016 high and that next medium term resistance level. And below, you want to focus in on 111.10. That's the low that we saw back on the 30th of May, which would be a neckline of a potential double top if the market breaks down and takes out that level. But again, overall, while we hold above 111.10, the pressure remains firmly on the top side and the risk continues to be for additional gains towards that next key resistance at 113.67. A break back below 11.10 would trigger a double top and expose a drop down towards the 109.50 area, at which point the market would then be looking for a higher low in continuation of this more medium-term uptrend for euro dollar. Sterling dollar. So cable has been consolidating after breaking down below a key previous resistance turned support area at 127.75. Remember, 127.75 had been the top of a range that had defined price action from late 2016 into April of 2017, with most of the price action being confined to the 120 to 127 area. And so this latest pullback is significant in that regard, but any setbacks now should be very well supported down towards the 125 area, with the market seeing a significant shift, a structural shift following that breakout above 127.75, which eventually exposes a move all the way up to 135. At this point, again, only back below 125 and really below 123.60 would compromise the more constructive outlook for sterling dollar. Dollar yen. So dollar yen remains confined to a downtrend, and the market is now trading towards that 2017 low that was seen in April, just ahead of 108. At this point, any rally should be very well capped ahead of 112, but ultimately it's going to take a break back above 114.37 to force a shift in this structure. Euro Swiss. So Euro Swiss has mostly been rolling over since stalling out ahead of a key psychological barrier at 110, and while the market holds below 110, the overall pressure remains on the downside and there is continued risk for a drop back towards some critical support down ahead of 106. It would take a clear break above 110 to force a meaningful shift in this structure. Aussie dollar. So Aussie has seen some nice gains over the past several days, with the market now trading back above some key resistance around the 76 area. It'll be interesting to see, though, if the market can sustain gains above 76. If it can, it would suggest that we could see a more significant move to the top side to retest critical resistance in the form of the 2017 high up around 77.50, and also some resistance that's more meaningful going back several months and even years in the 78 area. However, if the market can't hold above 76, the pressure does remain on the downside, and it would open the door for an acceleration of declines back towards that recent low that we saw in May, down around the 73.30 area. Dollar CAD. So dollar CAD setbacks have been quite intense over the past several days, but the market overall is trading within a broader uptrend, and so look for these setbacks to be well supported. We highlighted the 132 area as a key level. The market did take out 132.20, which was that level that we cited from April 13th, but we always like to look at the market on a close basis, and so it'll be interesting to see how the market responds to that level on a close basis and if it can continue to hold above really 132. If it could hold above 132, we could see a resumption of gains now, eventually back towards a retest of the 2017 high. If, however, the market establishes a daily close below 132, it will delay the constructive outlook and expose a deeper drop back towards the 130 area. Kiwi dollar. So the New Zealand dollar had a very nice rally over the past several days, out from 2017 lows around 68.15, 68.20, but at the same time, this is a structure that, if you look back at the medium-term chart, is continuing to show signs of potentially wanting to top out. So despite these latest impressive gains, there is risk that the market stalls out around current levels in favor of a resumption of declines. However, we would need to see a break back below 71.70 to strengthen this outlook and accelerate. Of course, if the market continues higher and pushes back through the 2017 high at 73.76, this would be a significant development and could shift the structure. SPX 500. The S&P 500 has recently broken up to fresh record highs, and following that breakout that we saw above 2400 several days back, the implication or the projection is now for a measured move up towards the 2480 area. At this point, it would take a break back below 2400 at a minimum to force a shift in the structure, or force a shift in the short-term structure, but more importantly, it would take a break all the way down back below 2320 to significantly alter the outlook for this market. Gold. So despite setbacks in gold over the past several days, this is a market that's been trading over the past several months in a more constructive fashion, putting in higher lows and higher highs and breaking to fresh 2017 highs just shy of 1300. At this point, look for these setbacks to once again be very well supported, ideally in the 1230 area or ahead of 1230, in favor of that next upside extension beyond 1300 and towards a retest of the 2016 peak at 1375 further up. Only back below the 1215 area, the higher low that we'd seen back on the 9th of May, would compromise this outlook.